Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy to be here.
Yeah. All right. So we're talking Uber. Stock's up over 50% so far this year. Do you guys have the data that backs up this move? Because it seems like, just 6-7 months ago, it was the death of rideshare, maybe with robo-taxis coming out, but now they're having link-ups with Waymo. So it seems like the bulls are back in charge here in Uber.
Yeah, whenever we look at Uber, we see actually overperformance in its delivery business versus its mobility business. And I think that this was kind of the theme last earnings, and we're seeing that continue through in our data. Whenever we look at the at-large, consumer interest for Uber, it's pretty flat, but for us, that shows that it's maintaining its prior growth rates. And whenever you look at this interest versus the stock price, we actually have those converging. So right now for us, our data definitely does support this move up in Uber. And I think that the key here is that the mindset has kind of shifted, and investors are now realizing that Uber has, I believe, 170 million monthly active users captive around 10,000 cities. So it has an enormous audience, and especially as it establishes these partnerships with companies like Waymo, and consumers are really excited about this new technology. This is like the next major growth catalyst for Uber because it significantly reduces company costs as it can kind of leverage that autonomous driving technology to help fulfill these trips, whether it be deliveries or actual, ride hailing. And so for us, when we look at Uber, things look about right, but we're certainly watching because I do think that long-term, a lot of this sustained growth is really dependent on how Uber can effectively leverage and become that go-to app for consumers and remain the go-to app for consumers, especially as autonomous vehicle technology improves and scales and competitors enter the marketplace. So we expect a little bit of volatility, anytime you see major headlines, whether it be, the robo-taxi launch earlier this week or potentially other partnerships. So I think that that's something to watch for investors, but for right now, Uber is in a really good position with a very large captive audience to really crank up the volume on margins if it can continue to leverage that autonomous vehicle technology.
Anyone who uses Uber knows that the app is spectacular and high quality and really well done. The risks was that the robo-taxi was kind of leave them behind and make them obsolete, and Elon Musk made some comments that they weren't needed in the robo-taxi. Tell me if I'm wrong, Megan. Does the announcement this week that they have a relationship with Waymo, so it looks like they're gonna be a player in robo-taxi, not to mention the fact that people get more and more used to not driving their car and not going to get their food and products and fast food and meals. They're now more ingrained in our life. And as long as they have a role in robo-taxi going forward, and as long as they have that, as long as there's not something that makes their future obsolete, this company still probably has a very bright future because that app is the highest level of quality.
Yeah, I completely agree. And if you look at the stats, consumers who are the Uber One members, so they're using, Uber and Uber Eats, they're more likely to book repeat trips, repeat deliveries. I think that 60% of Uber Eats deliveries business came through those Uber One members. So, we see that when you bundle services, it's really effective. And so far, Uber's doing that really well. I think the Waymo partnership is perhaps one of the most important partnerships that Uber needs to work to secure and defend so that it has exposure there. Because one thing I think was interesting that Uber noted on its last earnings call is that in Austin, with the launch of the Waymo cars, the 100 Waymo vehicles that they launched had 99% more requests and drive rates than not 99%. They had more requests and drive rates and demand than 99% of their drivers. So this is something where consumers are obviously really excited about autonomous vehicles. They're excited about new technology. We don't see consumers being spooked. And also, to your point, we do see this major trend emerging, especially among younger consumers who just in general are less dependent on driving. They're less interested in driving. Their rates of driving are falling significantly lower. I think it's 25% lower versus previous generations. And I don't know about you guys, but I see this just even among, younger siblings I have. I have a younger sister that lives in Chicago who does not have a vehicle in Chicago. She's completely reliant on things like Uber to, deliver food if she wants it or take her on a long drive. And so I think that is kind of a long-term shift that we're seeing emerging, especially in these larger cities, and that's certainly a tailwind for Uber. But I do think it's important, just whenever you're thinking about this as an investor, to not necessarily completely discount Tesla and the robo-taxi. I think that there's still potential for major disruption there, especially if Tesla is able to discount rides as significantly as they are. We do see indications from consumers that they're less brand loyal and more loyal to what service gets them what they need to do at the lowest price.
Yeah, tell your sister to hold out as long as she can. Do not get a car in Chicago. Traffic is nightmarish. It is the worst in the country. So stick with that if she can. Megan, real quick here, with the stock moving the way that it has, up 50% so far this year, do you guys still have this data that says, hey, there's still opportunity here? Because I've seen some price target hikes lately after this Waymo deal announced in Atlanta, so they're expanding there. Are you guys still bullish on this name as far as a score?
Yeah, in terms of our earnings score right now, we're actually falling in the neutral camp. I will say we are positive. I think it's around an 11. So, we still have positive data, but the stock has certainly had a nice run this year. And if you look at our interest in the stock price, those are converging right here around this level. So we'll keep an eye out. I think that the Waymo partnership can certainly, provide some bullish fuel in the near term. But we'll see. I think earnings aren't for a couple of months now, so we'll see how things shake out. We'll see how these partnerships emerge, but certainly data looks strong, but right now we don't show a significant edge. We have the stock price about right.
All right, great stuff, great data as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at LikeFolio. Kevin, I hear these partnerships, and I feel like Elon Musk is probably licking his chops thinking, hey, Uber's going to have to buy 1 million of our Model Ys that have, the robo-taxi and full self-driving. And if they start getting through regulation, start expanding their footprint there, that, hey, Uber's always talked about they'll be more profitable when they get rid of the drivers, but you still got to buy a car that has this or at least partner with somebody, right?
I've always said that, Tom. The problem with the Uber business model